Hello everyone, and welcome back to Explain the Charts. Today, on October 1st, 2025, we are taking a deep dive into Meta Platforms, ticker symbol Meta. This stock is at a fascinating crossroads, with a powerful long-term bullish narrative clashing with some very real short-term bearish pressures. We're going to break down all the latest news, from groundbreaking AI deals to concerning insider selling, and then we'll hit the charts to see how it's all playing out. Let's start by looking at the daily chart to get the big picture. As you can see, Meta has been in a very strong uptrend for most of the year, rallying from the $460s back in May. The stock pushed all the way up to an all-time high in mid-August. However, since that peak, the price has entered a period of correction and consolidation. Now let's talk about the news, because the fundamental story here is incredibly important for long-term context. The biggest bullish catalyst is Meta's aggressive push into AI monetization. The company announced it will start using conversations with its AI chatbots to target ads, a move that could unlock massive new revenue streams. To back this up, Meta just signed a staggering $14.2 billion deal with CoreWeave to supply high-end NVIDIA AI systems. This demonstrates their immense financial commitment to leading the AI race. Furthermore, Meta is also accelerating the development of its own custom AI chips, which could reduce its dependency on suppliers like NVIDIA and boost margins down the line. This long-term growth story is why Wall Street remains overwhelmingly bullish, with a median analyst price target of $850, suggesting significant potential upside. However, there are some significant red flags we cannot ignore. The most glaring is the insider trading activity. Over the past 6 months, there have been 353 open market trades by Meta insiders, and every single one of them was a sale. Zero insider buys is a worrying signal that suggests those who know the company best are taking profits. On top of that, we have broader market headwinds, with fears of a U.S. government shutdown weighing on investor sentiment across the board. The stock has also been underperforming the broader tech sector over the past month, indicating some relative weakness. This brings us to the recent price action, which has been decidedly bearish. Let's zoom in on the price action since the beginning of August. Here we can clearly see the peak on August 15th, when Meta hit its 52-week and all-time high of $796.25. This is now the major resistance level to watch on any significant rally. Following that high, the stock pulled back and found what appeared to be solid support in the $735 to $740 range throughout much of September. But in the last 2 trading sessions, we've seen a decisive break below that support level. Yesterday, September 30th, the stock closed at $734.38, and based on today's news, it has fallen even further, trading around $717. This price action is technically significant because it brings us right down to the next critical support level. That critical support is the low established back on September 2nd, right around $721. The fact that the price is testing this level right now makes this a pivotal moment for the stock. A break below this could signal the start of a much deeper correction. To get a better sense of this recent breakdown, let's switch over to the 1-hour chart and look at the last few days of trading. Here on the hourly chart, you can see the price chopping around that $740 level last week. But look at what happened yesterday on September 30th. We had a sharp, high-momentum decline that began around midday UTC. The price sliced through multiple intraday support levels and closed right near the lows of the session. This confirms the bearish break on the daily chart and shows that sellers were in firm control heading into today's session. Now let's drill down even further to the 15-minute chart to see exactly where the selling pressure intensified. Looking at the 15-minute time frame for September 30th, we can pinpoint the key moments. The breakdown really began to accelerate around 13:35 Universal Time Coordinated. You can see this large red candle that took the price from over $735 down below $733 in just 15 minutes. This move came with a spike in volume, which tells us there was strong conviction from the sellers. The price then continued to grind lower for the rest of the day, showing no signs of a significant bounce. This is the kind of price action traders watch closely as confirmation that a support level has failed. Let's go back to the daily chart to put it all together and talk about what to look for next. So, we have a clear conflict, a bullish long-term AI story versus a bearish short-term technical picture and concerning insider selling. Let's recap the most important price levels. Our critical support is right where we are now, around $721. If that level breaks, the next major downside targets are the psychological $700 level, and then the lows from late July near $695. To the upside, the first level of resistance is the old support level around $735. Above that, we have resistance from the recent cluster of highs between $755 and $765. The ultimate resistance, of course, is the all-time high at $796.25. Now for some unbiased predictions. For the bearish scenario, which I'd say has a high probability in the very short term, a daily close below $721 would likely lead to a test of $700. The negative market sentiment and the recent technical breakdown support this view. This would be reinforced if we see continued broad market weakness. For the bullish scenario, bulls need to see the $721 level hold decisively. If the stock can bounce from here and form a bullish reversal candle, like a hammer, it could trap short sellers. A move back above $735 would be the first sign that the bulls are regaining control. I'd place the likelihood of this as medium. It's possible if the AI narrative quickly overshadows the short-term fears. The key thing to watch is today's closing price. A close below $721 is a strong bearish signal, while a close back above it could set the stage for a potential bounce. Also keep an eye on Meta's upcoming earnings report, as expectations for that will begin to heavily influence the price. That's our breakdown of Meta. It's a complex situation with strong arguments on both sides. Always remember to do your own research and manage your risk. If you found this analysis helpful, please hit the like button, subscribe to Explain the Charts, and let me know your thoughts on Meta in the comments below. Thanks for watching, and we'll see you in the next video.